Hey, welcome guys. Oh, hello. Oh, 7 likes. We didn't even start. Wow. Thank you guys, thank you. Alright, let's wait just a couple more seconds as people are getting notified that I am live on YouTube. And from Discord as well, from Instagram, from everywhere. From Twitter as well, or X. Hey, Do Nothing, what's up? Hello. Good to see you back. Welcome. 8 likes, wow! Seems like I'm about to reach 10 likes before I even begin. Awesome. Okay, well, welcome to this week's Tuesday live stream, everyone. Welcome. Hello, guys. Hey, what's up? Hello to everyone who's just joining us now. We're just about to begin, so you guys came right on time. Welcome. Make sure you guys smash that like button down below. And of course, if you guys aren't subscribed yet, make sure you guys hit that subscribe button. We just passed 400 subs. Isn't that amazing? Our next goal is 500. So we just passed 400 as well. We hit 401, I think, today. So let's get to that $500 number. All right. So we have a very historic moment tomorrow. Okay, a historical day tomorrow, and that is the first official rate cut since the Feds have begun raising interest rates in 2022. Okay, I believe it began in May 2022, if I'm not mistaken, or March 2022. And so, essentially, if you guys remember, we didn't have, we didn't have a FOMC meeting in August, but we did have one in July, right? So they basically took a month break, and back in July, let me just give you guys a quick summary of what occurred, okay? So just off the top of my head, Jerome Powell basically said, they're going to continue to focus on, achieving the maximum employment, right? Making sure that they're focusing on the soft landing for the entire economy and just overall not, hurt the labor market itself. And that's been the goal since 2022. And obviously stabilize prices, right? Bringing inflation down. And he also basically said that, it was pretty much a similar things that he's been stating for this entire year, that inflation has been dropping rapidly and towards their 2% target, right, or goal, and that they are in a position, in a very comfortable position to continue to pause or to officially start cutting rates. And that's the reason why in July the markets really liked what he said there, right? Because he mentioned that they're in a comfortable position and they might be ready to officially have rate cuts on the table. But obviously on July, they kept the federal funds rate, the target range, to 5.25% to 5.50%, which is again a pause. And I believe in that meeting as well, they did talk about how they weren't having any more plans to increase rates anymore, right? They didn't see any need to continue to increase that federal funds rate range. So that's another positive. But if you guys remember again, right, after this July FOMC meeting, the markets were also a bit spooked in the fact that they thought that they should have cut in July, right? They were making another mistake again by not timing this rate cut perfectly, right? Because again, back in 2020, they continued to print money, right? They had a very easy monetary policy that they did not stop early enough, right? And they kept on going and going and going until they had to switch to a restrictive monetary policy. And so, they just overall, they continued to reduce their assets, their securities holding, right? They continue to have a restrictive monetary policy. And so with this upcoming September FOMC meeting, which is tomorrow, where we get the rate decision and the news conference, we are looking for a complete shift in that monetary policy and also the official beginning, the genesis of the rate cut cycle. Now, if you guys remember, I've mentioned this a couple of weeks ago as well. The first rate cut and the first official rate cut cycle are completely different things. Why? Well, first of all, for example, if tomorrow Jerome Powell says, we will do a rate cut today, 25 BP or by 50 BP, but we might pause again. We may pause again heading into the end of the year. So we have 2 FOMC meetings left, November and December. And if they do say that, if they do have that on the table where they will just introduce the first rate cut tomorrow and then continue to pause into the end of the year, that won't look too good, right? Because the Federal Reserve has been waiting to become data independent, because right now they are data dependent, right? They're trying to focus on, making the correct, actions through the data that they see on a weekly and monthly basis. And they want to stray away from that from this point forward, especially after their first rate cut, because again, they want to make sure that the overall inflation is going down and labor markets are continuously holding strong, and we're not going to see continuous increase in unemployment and jobless claims. Right. So first of all, regarding the jobless claims as well and unemployment, it seems like we're starting to find a plateau, right? We're starting to kind of form that little bit of an asymptote there, and that curve, that upwards curve that we began to see back in July, right? I believe it was July and June. I believe it started in June, we bottomed out in June, and then July we started to uptick higher. So that was kind of one of the major reasons why people were scared that the Federal Reserve was essentially late to the rate cut, or at least the very first rate cut. But then again, those fears were very unnecessary. They were very unwarranted because of the fact that the rate cut cycle is what matters more, right? We need to see the first rate cut cycle beginning, right? And obviously the first rate cut will introduce that, but we do not know yet whether or not the Federal Reserve is wanting to continuously introduce rate cuts or have rate cuts for November and the December FOMC meetings. And I believe that Jerome Powell will hint at that tomorrow. I don't think he'll officially state that we'll be starting a rate cut cycle tomorrow, but he may hint at the fact that they might slowly cut rates by at least 25 BP, right? So minimum 25 basis points and maximum 50 basis points. Now, for me personally, if you do see, the Federal Reserve starting to say, hey, we need to cut a lot faster and a lot quicker and a lot more in every single FOMC meeting, like, 75 basis points, that will be a little bit worrisome, right? Because that's basically, telling us that, hey, the Federal Reserve is being spooked by something, maybe like the labor market, or the fact that we're going to see an increase in prices again, right? Inflation is going back up again, right? Those are the worries that comes up in my mind that could potentially affect the Federal Reserve, and will try to, basically alert the Federal Reserve to try to cut a lot more in every single FOMC meeting, like 75 basis points or 50 to 75 basis points. Hey, what's up guys? Welcome. Make sure you guys hit that like button down below. But for all the people who are just joining in, make sure you guys watch the recording, right? I always say this all the time, but I truly mean that when I say it, right? Make sure you guys watch the recording. We did just begin about, I would say, let's see here, like 10 minutes ago. So make sure you guys watch the recording, all right? So with that being said, that's a quick summary of July's FOMC meeting and what we can see tomorrow. How will the markets react? Well, first of all, seasonality-wise, we tend to see a lot more weakness coming in, seasonal weakness in the last half of September, and we're nearing the midpoint of September. We have, I believe, this Friday, we have OPEX, right? The monthly expiration on Friday, and we have VIX expiration as well. I believe the VIX has an expiration as well for the date this week. I think it's tomorrow, if I'm not mistaken, on Wednesday, but I think I have that wrong, but that's just off of my brain there on the top of my dome. But so essentially what I'm telling you guys is that there is going to be volatility. I mean, obviously, that's true, right? I don't think I need to tell you guys that, since tomorrow is a historical day, right? It's going to be a historical day for the broader financial markets. So, we are obviously going to get an increase in volatility. So VIX will expand, market vol will expand, and you'll see the volatility index for the S&P 500, or ticker symbol VIX, taking a small bump to the upside, but I don't believe it's going to be like the likes that we saw back in early August, or even this month in the first few trading days of September, right? So with that in mind as well, with this seasonal weakness, right? On top of all that, with seasonal weakness coming in usually in the last half of September, that's something that you guys should be cautious about, right? I mean, even today, based on the options flow that I was taking a look at early in the morning, we saw some very large hedges being opened. So they didn't sell their long positions, and who am I talking about? Well, the big players, right? So institutions, big money fund managers, right? They did not sell, rather they opened up very, very large hedge positions because they know that volatility would increase by the end of this week, okay? Especially starting tomorrow. So that tells me that they're most likely going to be hedging for the seasonal weakness that we will see and experience from the last half of September all the way up into the last day and week of October. I'll get into a lot more on that on the October and November in the CFO Stream Watch report itself. But if you guys aren't readers yet, make sure you guys DM me on Instagram and I'll provide you guys with a discount code, right? So again, we had the seasonal weakness, but on top of that, historically, the markets tend to move down after the first rate cut is introduced. But most importantly, we see a larger and mid to long term dive downwards when we officially get a rate cut cycle. All right. Again, let me remind you guys, the first official rate cut versus the rate cut cycle, right? It's two different things. Why? Because tomorrow we will most likely see a rate cut, right? Either 25 BP or 50 BP, whatever it is, we'll get a rate cut. But the most important thing that's significant to us is what happens after this first official rate cut in the November and December FOMC meetings. And so Jerome Powell hints at the fact that they might have another pause on the table in November or December because they're still data dependent. Then the markets can react a little bit more negatively, right? Because you might be scratching your heads. Why are the Feds a little bit nervous still, right? Aren't prices going down? Isn't the labor market holding up pretty well? Aren't they confident in this soft landing that they've constructed, right? So those are the questions that will pop up in everyone's heads if Jerome Powell hints at the fact that they might continue to pause in November and December, especially if they continue to be data dependent instead of slowly weaning off of the weekly and monthly data that we get that is essential to their actions in every single FOMC meeting, right? So even today, right? Even today, they basically deliberated for most of today, and right now it's in the East Coast. It's obviously they're sleeping, all the Federal Reserve members. But tomorrow morning they'll deliberate again, and they will officially announce the results of the rate decision at 11 p.m. Pacific Standard Time, or 2 p.m. Eastern Standard Time, and then Jerome Powell will obviously come out 30 minutes after that, right, for the news conference. So, with all that being said, right, you guys have to understand that tomorrow, since it's such a historical day and so much anticipation has led up into tomorrow, we'll most likely see a sell the news event on both of the two different catalysts that we have for the FOMC meeting. The first one will be, obviously, the rate decision, and the second will be the news conference itself. So every single word that Jerome Powell says tomorrow will matter a lot more than the previous FOMC meetings that we've had this entire year, to be frank. And, it'll definitely matter how much they cut tomorrow. So let me show you guys something here. So if you guys don't use the CME FedWatch tool, I've been actually tracking this since yesterday, since Sunday actually, but yesterday the probability of a 50 BP rate cut was at 50%. So it was a 50-50 between 25 and 50 BP. But now, heading into tomorrow, what we have is a 65% probability that we might be seeing a 50 basis point rate cut. Now, is that bad or good? Neither, right? Because again, we don't know how the market is actually going to react. But from a personal perspective, a 25 or 50 BP is fine, completely fine. I've seen people on FinTwit saying, oh my god, the 50 BP is going to crash the markets and we're going to be seeing, fears coming back in again. But I don't think that's the case, because why? Well, interest rates are very high still, right? A 50 BP cut is not going to do too much to the actual target rate range that we are currently in, right? So, as long as we see either a 50 BP and Jerome Powell doesn't hint that, maybe they're looking for 75 BP and they're saying that 75 BP rate cut is on the table in the next couple of FOMC meetings into next year, well then I'll be a little bit skeptical and trying to be a bit more bullish on these rate cuts, right? Because that might be indicating that the Federal Reserve is kind of panicking, right? That they need to be quickly putting down the overall benchmark interest rate. Does that make sense, guys? Okay, so essentially, all right, so hopefully you guys got a good look at this, right, this graph here, all right? Essentially, what we want to see tomorrow is basically a sell the news event, right? So I'm honestly thinking that we get a nice pump up tomorrow on the rate decision itself, and then when Jerome Powell begins to speak, then people will start offloading on the long positions that they've had. All right, again, we saw some very, very large hedging going on, even into the end of the day actually, on the options flow that I saw and I was tracking on the overall indices, and so we saw a lot of hedging coming into NASDAQ as well, so QQQ. So QQQ on the other hand has been slightly lagging here, right? So the S&P 500 has made a new all-time high today, the Dow has made a new all-time high, but NASDAQ on the other hand has been acting like, well, to be frank, like the small caps and mid caps. And this is the quarterly chart for IWM. If you guys didn't know, this is the 3-month time frame. But anyways, NASDAQ has been trailing behind, and in fact, the overall breadth for NASDAQ itself has been trailing behind as well. So let me give you guys a look at this. So this is the McClellan summation index. It's just overall market breadth. I mean, it's nothing that you guys should be confused about. I mean, you guys can look it up. I mean, it's not really too important, but from a market breadth and market internal standpoint, it is very important in that perspective. So if you guys want to know how to use this, then go ahead and take a look at Google, your best friend, right? So NASDAQ here, we see the McLennan Summation Index, or MSI, consolidating, right? And that's essentially what the price has been doing as well. We've been making a very large wedge essentially on NASDAQ. I mean, you guys should be able to see this, right? Okay, we have a descending resistance trend line and an ascending support trend line. On the other hand, we've been seeing the S&P 500 making higher highs and higher lows in a very, very bullish manner, along with the Dow as well. Okay, so NASDAQ is acting very similarly to Russell 2000 or IWM. However, on IWM, the market breadth is actually stronger than NASDAQ. So just based off that market breadth perspective, right, the Qs are really lagging now at this point. And so tomorrow is going to be a make or break day for NASDAQ itself. And even if you take a look at individual leading groups like IGV, right, software tech names, they weren't doing too hot today either, right? We saw a nice gap up in overall leading groups, but then we saw a complete gap fill and then some more on groups like software, IGF, excuse me, IGV. I've been saying IGF for some reason. So IGV. Okay, so tech software sector ETF. And if you take a look at SMH as well, right, semiconductors, they were acting in a very similar way as well, right? So this is looking a bit, wishy-washy here, right? We're not bearish, we're not bullish, but we're just kind of stuck in the middle as we head into tomorrow's historical day. All right, especially when the leaders are acting like this, while very rate sensitive tickers have been moving up very rapidly to the upside, like the Russell 2000, right, IWM, the past couple of trading days. Okay, it was yet another straight up day for IWM. Even if it did close red, we actually ended up closing higher of 0.83% with a nice little gain, right? So with all this in mind now, okay, when we see these leading groups not performing too well on a day like today, when we see the smaller small cap and mid cap names and rate sensitive names, or rate cut specifically sensitive names like home builders, XHB, right, ITB, okay, they've all ended up higher on the day, right? And even for the real estate names, right? So names that are involved with mortgages, right? Mortgage rates, right? Zillow Group, Z, or ZG, or RDFN, Redfin. Right, they've all been moving straight up, right, with very, very bullish momentum as we head into tomorrow's official first rate cut. Again, we do not know yet if it's going to be the official start of a rate cut cycle. Make sure you guys remember that. Right, those are two different things, and those are the two distinctions that you guys have to make tomorrow when we are listening to what Jerome Powell is saying in the news conference at 11:30 p.m. Pacific Standard Time or 2:30 p.m. Eastern Standard Time. I believe I said 11:30 p.m. 11:30 a.m. Does that make sense, guys? Okay. Oh, hey, I see you guys' emojis there, your reactions. Perfect. Okay, so hey, 10 likes. Thank you guys. Thank you. Hey, what's up, guys? So for anyone who's just joining in now, make sure you guys watch the beginning of the stream. I talk a lot about the things that you guys need to know tomorrow, and most importantly in the mid to long term. So again, I also talk about what you guys need to be focusing on when Jerome Powell speaks tomorrow in the news conference. The difference between the first rate cut tomorrow and the rate decision and the official start of the rate cut cycle. Those are two very distinct things that you guys need to remember. All right. So for everyone who is just joining in now, make sure you guys watch the recording, from the beginning, from the beginning to the end. I always say that, right? So now, with the fact that the markets have hit an all-time high today at 566.58, there's still a possibility for us to hit that 570 target that I've been touting about since late August, right? I believe I said that somewhere mid to late August. So even if we do hit 570, right, we can still have a nasty rejection as we start to see that market sell-off from that sell the news event, right? Since there's been a lot of hype and anticipation building up this entire year along with last year in 2023. And remember guys, the reason why we started a bull market in 2023 was that the markets were getting very, very excited essentially about rate cuts in 2024, the prospect of rate cuts in 2024. So, you know, it's been an accumulation of hype and very bullish sentiment, and tomorrow will be the deciding day of whether or not we can continue to see that bullish momentum and sentiment, or it's going to be a blow off the top moment and we'll get that sell the news event coming in by the end of this week, right? But you know, from a personal bias, even if we do see a sell the news event, and even if we do crater into or actually cater into, I think that is the correct word, the seasonal weakness of September, right? The last half of September, right? Again, we tend to get seasonal weakness in the last half of September, and then that seasonal weakness lasts until the last day and week of October. Okay, even if we do see that weakness, we should not be seeing the start of a new bear market or you know, a crazy crash to like 10 to 15 or 20% from the current highs, or the current all-time highs. So again, if you guys want to see the percentages there, right? I mean, from the current all-time highs, right? If we move down even 15%, right, we're gonna lose the daily 200 SMA here, and we'll be all the way back down to prices that prices we haven't seen since well, January of this year, right? We'll be back down to like 477 and 470 and etc. Right? I mean, I don't think that's gonna happen. That just doesn't make sense to me, right? We can see seasonal weakness. That's completely fine with me from September to October, but I don't think that we'll be seeing this crazy decline in overall market prices like I've been seeing on FinTwit. Okay, so from a short-term perspective, watch out for any type of a rapid move down from a sell the news event like tomorrow, and also OPEX and VIX expiration this week. All right, and we've been seeing, you know, big money, you know, the institutions, the smart money, the big money fund managers, all starting to hedge today as we head into tomorrow. So that's something that you guys should always remember by the end of this week. All right, so I told my CFO Stream Watch members and private CFO Discord members to, you know, manage well today, start to take some profits and also hedge. Right, so today I called out a specific hedge on SQQQ. Why SQQQ? Why did I choose the Ultra Pro Short QQQ? Well, first of all, since, you know, if you guys remember from a couple minutes ago, I told you guys that the Nasdaq has been lagging. Right, it's been very, very much lagging, and even just from a perspective of the market breadth or market internals, it's lagging behind even the Russell 2000 or small caps. So I wouldn't be surprised if both small and mid caps cumulatively are moving a lot more compared to, and advancing a lot more compared to Nasdaq in the past couple of months. Okay, I have to take a look at those stats, but I wouldn't be surprised if I see that, right? So again, Nasdaq tomorrow, very much a make or break type of day tomorrow, and if we do see a rapid move down tomorrow from a sell the news event, or just from VIX expiration, or even on Friday from OPEX, the monthly OPEX day tomorrow, on Friday of this week, September 20th, you know, I wouldn't be surprised, right? And that's the reason why we chose SQQQ as our hedge. Nasdaq will be leading that weakness on top of the seasonal weakness that we get as well, right? So Nasdaq always tends to be the leader in strength and also a leader in weakness. You guys should remember what I just told you guys there. All right, Nasdaq always tends to be the leader in strength and leader in weakness. All right, well, that's pretty much it, guys. I mean, I don't really have much to talk about, other than the fact that there are some tickers that you guys should be watching for once we do get that rate cut, because the rate sensitive stocks will still see some very bullish price action. Why? Because from a mid to longer term perspective, the rate cuts will matter for these rate sensitive names. And the number one stock that I'm looking at for these rate cuts that could occur in the future, right? So again, that rate cut cycle in the near term future. Okay, remember there's a difference between rate cuts and the rate cut cycle, right? So the first official rate cut compared to the official rate cut cycle. They're very different things. All right, I've explained that multiple times throughout the stream, so make sure you guys go back to the recording or replay of this stream. Okay, so the number one ticker that I'll be looking at is FSLR, the leading solar ticker company. All right, so FSLR is looking absolutely amazing here. It's been making a very nice bull flag as we head into the first official rate cut tomorrow. And this one should hold steadfast even if we do see a broader market sell-off from that sell the news event. All right, so again, this is one of the major names that I'll be looking at, and probably the only name that I'll be focusing on from the mid to long-term perspective if we do see that official rate cut cycle being uttered by Jerome Powell tomorrow in his news conference. Does that make sense, guys? Hey, welcome, guys. Whoa, welcome. For everyone who just joined in now, I think we just hit 20 viewers here. Wow. For everyone who just joined in, make sure you guys smash that like button down below. But we are nearing the end of the stream here, so make sure you guys watch the replay. It's essential that you guys watch the recording of the stream before tomorrow, because I talk about some very important stuff that you guys should know before Jerome Powell speaks at his news conference tomorrow. Does that make sense? Very, very important that you guys understand what I just said there. All right, so make sure you guys watch the recording from the beginning to the end once I'm finished with this stream. All right, well, that's kind of the only thing that I'll be looking at, this FSLR, as it makes a very nice flat base here between, I would say 200 to around 240, or 244.50, excuse me. So, yeah. Well, it's been a long ride, a long unanticipated ride here, but we have our first official rate cut coming in tomorrow, and potentially the potential beginning of a rate cut cycle. All right. Well, good luck tomorrow, guys. I'll see you guys on Thursday at 8:30 p.m. Pacific Standard Time, or 8:30 p.m. Pacific Standard Time, or 11:30 p.m. Eastern Standard Time. All right, the same time as today. But yeah, make sure you guys subscribe to the channel here, and once you guys subscribe, the most important thing is to turn on your notifications by hitting that bell icon that you see, and it will pop up once you hit that subscribe button. All right, and why is that important? Well, you guys will never miss out on my streams on Tuesdays and Thursdays, but again, you guys don't really need to worry about missing out since the time is always going to be the same for both days, right? 8:30 p.m. Pacific Standard Time or 11:30 p.m. Eastern Standard Time. But again, if you guys don't want to miss out on any video uploads that I have throughout the week, make sure you guys have that notification bell on. All right, good luck tomorrow, guys. Thank you so much for watching. Thank you so much for the likes. Have a great rest of your night. See you guys on Thursday.